Hello and welcome to Pro Trader Strategies Market Commentary for Friday, March the 16th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data across the pond. Actually, let's go all the way over to Japan. We don't talk about Japan a whole lot, but we did get some economic data from them today in the form of revised industrial production month over month came in at 6.8%. Actually, that's a negative 6.8%, worse than the expected negative 6.6%. Not doing too well over in Japan as we speak. We got final CPI out of Europe. Came in at 1.1%, expected to be 1.2%, so slightly lower than expected on that front. And then here in the United States, we got building permits. Came in at 130 million permits pulled, expected to be 132 million permits pulled. Remember, we talked about that. Pull as many permits as you want, as long as you are planning to build. Doesn't really mean that you are actually going to build, as we're seeing in housing starts coming in at 124 million units, expected to be 129 million units, so lower than expected on the housing starts. Some of the reverb from that is the construction side on the housing market is saying that they're having trouble hiring quality workers. So that being said, it means that those workers that are generally what we call underemployed when they go out and find a job that they may not necessarily or they may be overqualified for just to get a paycheck are now leaving and going back to their regular jobs is what it's starting to look like to me. All right, so housing starts coming in a little bit lower than expected. Capacity utilization came in at 78.1%, expected to be 77.7%. Capacity utilization going up. That has to do with manufacturers, miners, and like utilities, how much they are expending of their available resources. So if you think about a manufacturer that can pull 3 shifts working on 100% capacity, right now it's at 78% capacity. When they start approaching 100% capacity, that's where they start raising prices usually, because supply and demand, right? The demand is high, they're trying to crank it out, but now they know that their supply may be limited because they are at capacity. That means they would have to raise prices. So that's what the Fed really wants, is we want capacity building up, we want demand, and therefore driving inflation. That being said, capacity utilization moving up kind of moves closer to that mandate. We also got industrial production came in at 1.1%, expected to be 0.3%. They did revise last month's number down from negative 0.1% to negative 0.3%, but that isn't going to affect us that much because they knocked it out of the park with the industrial production number. As a matter of fact, that number is at the highs we've seen since like 2014, something like that. I'd have to pull up a chart on that, but it was quite a ways away since we've last seen industrial production number that high. It was basically all the way back to 2000 and actually, probably close to 14, 15, right in there. Having that as the highest number for industrial production. Then we also got University of Michigan consumer sentiment came in at 102, expected to be 99.2. That number also being the highest number that I can remember going back. As a matter of fact, that number, I traced it back to 2005, and it's still the highest number since then. So, we're talking 13 years or so. Quite a dramatic number for the consumer sentiment. Really good. And as a matter of fact, most of the people that answered this University of Michigan's consumer sentiment are Democrats. So them being confident is quite something to be said for the overall economy. And then JOLTS job openings came in at 6.31 million, expected to be 5.91 million. So a lot of jobs starting to open up means a lot of hiring going on. That is good for the overall economy. These numbers starting to look a lot better. Remember, we had about a week of a lull of good economic data today, surprising on the good economic data as showing up in crude oil. If we have all this demand, capacity utilization going up, manufacturing, that drives demand for oil. We're seeing that right now in crude oil futures moving higher by about $1 right now, trading $62.12. But something to note, it is up against the 50-day moving average, which is going to act as resistance. And that trend channel I showed on this corrective trend channel here, we're bumping up against that as well. Need to bust above both of those. And then the next one right in line there is the 23 Fibonacci level. For this is a Fibonacci projection. As a matter of fact, I went from this low here to this high, actually to this low. I drew it out over here to the side so I could see all the data points, and I removed the 50 Fibonacci right here because it was just slightly lower than that one. I figured I'd go with the long trend Fibonacci on that and leave that in place for a resistance on the way up. But do a couple of fibs around that. I like the way that these fibs are really lining up with everything, so that works out quite nicely. I love it when fibs line up with my market profile and other support resistances we found in the overall markets through price discovery. All right, so let's move on to the next one. We got gold futures coming off a little bit, as we would expect. You know, there is a little bit. We're not really seeing a whole lot of inflation, but we are seeing good economic data, which is driving the overall equities higher, and that's a flight to quality. That being said, people are going to pull their money out of the fear trade, which is the gold futures here, and we're seeing them come off a little bit today by about $4, down inside the value area. It's broken below the value area high. So we're still getting a lot of support over in this area, right around the 1312 area, 1313 we can call it, just to be ominous. This is going to act as support right in that area. That's where the bulls are really starting to defend. We've got Bitcoin futures finally getting a little bit of traction today, moving up by about $270, still well below that $10,000 mark. That is the line in the sand for the bulls and the bears. You know, this is where the point of control is. It's pretty sloppy right here, but it's right in between this whole 10,000 or 11,000 to 10,000. It's a pretty wide mark. But remember, Bitcoin moves at that type of pace in any given day of 1,000 points. So it's not that big of a swath, if you will. All right, on to the VIX coming off by a point now with the equities moving higher. That's normal. I'd like to see these VIX numbers stay up in the teens, that's for sure. But we are starting to see a little bit of breakdown in the VIX futures because we're seeing the equities moving higher, like with the Dow Jones Industrial Average, something to talk about here. We've talked about this trend channel acting as support, continuing to do so as it's marching slightly higher as we go. 91 points in the past couple of weeks is not a big move, but as you can see, the past year, that would have been a rather big move. That being said, this year is a different story, hopefully, and moving higher by 91 points in the Dow Jones Industrial Average. That doesn't take into account overnight. Keep in mind, we've got the NASDAQ slightly lower. I mean, they were just higher just a few minutes ago, it felt like, but down almost 30 points on the day, bouncing on this trend channel. Again, I did this Fibonacci extensions here, or projections, I should say. Started out down here with a measured move to this high and then down to this one just to get some movement there. I thought about picking something over here, but these lined up pretty well with all of the other markers that I have set up already. And you can see that these fib levels have acted as support and resistance, but we are right on the trend channel and the 9-day moving average kind of converging right here. So that is going to act as some major support. We break below that, we could see a lot of weakness and come back down to around 29, break below that 7,000 handle. Don't expect that to happen anytime real soon, but that would be the target if we start breaking below that too much, because that 38 Fibonacci would be next in line. Again, trying to do these projections across the board, took it from this low to that high to this low. That would be the A, B, because we came off of this. That would be A, B, C, and line those up. They look pretty nice for Fibonacci levels. Right now, again, similar situation, E-mini, S&P, 9-day, 50-day, and the 61 Fibonacci level all coming right in line there. That is going to act as major support for the bulls. Now, if we look at the daily chart, this is 30-minute bars on a daily segment. Any one of these individual blue areas is a daily chart. This is also those same Fibonacci levels that we saw before, just a little bit wider because we're zoomed in a little bit. And as you can see, this Fibonacci level is acting as a very nice support for the past couple of days and bouncing up and away from that nicely. All right, on to a few things that I've done. I'm really keeping a close eye on this Procter & Gamble. Started doing some lines on this, getting a little Fibonacci happy with everything. And let's look at the daily chart on a 3-year, 1-day chart. And we can look at Procter & Gamble way back. You can see I threw these Fibonacci's from the 3-year low to the 3-year high, threw in some Fibonacci's, and then I also did the measured move on that same trade where we took this as the high and did a regression on this as well. But my issue here is if we break much below this 161, which is the golden number on the flip side, and that is going to act as support, we should expect. If we start breaking below this, I don't even know that this right here is going to act as support at all. I think we're going to get this support. My fear is that we are going to drop straight down to about $71, which would really start to test me. If I put that Fibonacci level back in there, that is just below, or right around, I should say, where my Procter & Gamble trade is, because I have on this short 75 put. So, that being said, that Fibonacci level was right there. That was my support, but it doesn't really line up with anything. It might hit this here as a bit of support as it did before. I'm not going to draw a line in there right now. I'm going to really keep an eye on this 161 fib level. And if we start breaking below that much, especially below this 77.88, I'm going to be pulling the ripcord on it. Just did some technical analysis yesterday and started changing my thought process on this. It's just pretty bearish, and that move does not look nearly as bad as on this chart as it could, or as it did, I should say, even on the 1-year chart. So we need to keep that in mind as well. All right, on to the couple of trades that I did for earnings. I did Adobe, and I said I was going to be playing. I didn't know exactly what I was going to be playing with Adobe, but I ended up playing this to the upside and went in there and sold the March that expired today. So you get that real fast data decay, especially with this volatility drop right now. That just decimated all premiums, which is what we love to see when we're trading options and selling premium. I sold the March 205 puts in there for 61 cents and beat on earnings, jumped to the upside, didn't have anything to worry about, but I did cover those immediately on the open, probably 15 minutes after the open, almost 20 maybe. And I covered those March 205 puts for 3 cents. So nice winner there. And then didn't do anything in my IRA. It was just very margin intensive. I couldn't get those spreads, especially in ULTA, because the back months were really wide, or the further out of the money got really wide. So I wasn't able to buy that extra option for a nickel. All right, on to ULTA. ULTA is a similar situation. This is on the intraday chart, or this is the 15 or 30-minute chart here. But the reason why I threw it on a 30-minute chart, so you can see what happens overnight. They came out and they beat on earnings quite nicely. The one thing that they said is forward guidance wasn't looking too good. So that's when it slammed down right down to where the market maker move was. And I went just outside of that market maker move, as I talk about in my earnings webinars that you guys got to check out if you're going to be trading these webinars, because I have a lot of rules in and around that where you can find your placement so that you're outside of those market maker moves and things of that nature, how to figure out what that market maker move is. Anyway, that 187.88 actually coincides with the lows we've seen quite recently. And as we draw this out on the daily chart for ULTA, you can see that when we broke down overnight, we went down to that 188. It was right here to this low here, 188 and change. So came down and tested that that low there. So that held, bounced off of that. So that was quite nice for me anyway. But we did break below this Fibonacci for that interim. And this chart does not show the overnight session, which I just showed you to give you a better idea on that breakdown of what actually happens in the overnight session. So that's why I pull this up so that you can see this. All of this here in the gray is not showing up on the daily chart. So this is what happened overnight after our session, and you can see it slammed down to that point of the 188, let's call it, and tested that low. Now we have bounced up and away from that quite nicely. Was able to cover those easily. And in the ULTA, I went in and sold those same March monthlies that expire today, and sold the 182.5 puts in there for $1.05. Bought them back today for a nickel. So made $1 on that trade quite nicely. Was tested overnight. Didn't look too good, but immediately snapped away. As this is a 15-minute chart, you can see that was a quick move and recovery. So coming into today, I didn't have anything to worry about and was able to buy those back for a nickel. All right, that's all I got for you guys today. Today is Friday, March Madness. I took this week off for vacation, but decided to go ahead and do a couple of market commentary. So we don't have anything really scheduled today for a webinar, but we'll be back in the saddle again next Friday for a webinar. So check that out as well. All right. So that's all I got for you guys today. If you can't take that, take it easy.